saved my neck because I had no idea. Anyway, good. Okay, are you guys ready? Yeah? So very quickly, because this doesn't give a good account of what exactly you do. So in a minute, let's start with me. What exactly do you do? Like you're qualifying yourself for why you should be in this conversation.
Hi everyone. Thanks for having me once more here in Kigali at ADH. My name is Tamim. I'm a co-founder at South Africa Ventures. We're a venture capital fund investing in early stage companies across the continent. Basically, giving entrepreneurs money and supporting them through the different stages to make sure they grow as quickly and the best possible way.
Okay, fantastic.
Good morning, everyone. The name is Sanzineza, and I'm here on behalf of Higa Capital. We are a recently created VC fund. We operate out here in Kigali, and my partner is also in Nairobi. And we are deploying capital across the continent, where we're supporting fintechs and other enablers of the B2B ecosystem. Again, very happy to be doing the work that I do, and obviously hoping that we can be able to support more ventures this quarter and obviously this year as well.
Fantastic.
Good morning, House. My name is Oluwato Sinolasende. I'm the founder of Money Africa. Money Africa is a financial literacy platform that educates people about their money, leveraging on technology. We also have a fintech platform where people save and invest. And we have a social media following which of over 500,000 people. Thank you.
Very good.
Good morning, everyone.
Well, I would say good.
Yes, say properly. So I'm an Argentinian. You must be thinking why I'm here. On one side, I have a startup that is called the Future Co. We work in rural communities with a total purpose of eradicating poor in those areas. And on the other side, I have a VC fund, but we invest only in Latin America. But I think that there's a lot of similarities between the two regions, in which maybe we can have some thoughts and learnings from them.
Very good. We're happy to have you here. And I'll start with you. When is the right time for a business to consider external funding?
Okay. So I think that there are many right times when we need to look for funding externally from what you have along the life of a startup. So let's just think on, I think, 3 moments after you get into a moment in which you need just simply to growth and you are beyond Series A and maybe you figured out how to do it. So at the beginning, I think that the most important thing to look for funding is when you really find a huge problem. I look for people that is totally involved in problems, not much in solutions. And when it's really a blue ocean, maybe you can have some competition or not, but it's something that it has really wide over. And you can show that you're the right people in order to solve it. For sure, at the beginning, you invest in the right teams that they can tackle that problem. Then, if you move forward there, and you show that there's a market over there, that you show that you have a product and a solution that will tackle the problem, then you should look again for funding in order to start growing. And once you do that and you start showing traction, there's a new moment in which you need to look for funding in order to scale it up and grow a little bit faster than just simply bootstrapping and using your own income and margins.
Okay, and you can prove to scale. I want you to tell me, because I know you're very passionate for this particular discussion. So I have a big problem that can be solved with money. What type of funding should I be looking for? How do I identify and also define the various ones for us? So we spoke to Hassan about VC. Give me the rest.
Yeah, and I think I'll go back to something that the second entrepreneur said in that conversation with Hassan. The best time to raise money is actually when you don't need it.
When you don't need it.
Because that's when you have the best leverage in your discussions with investors. Don't wait until you're running out of cash to engage in those conversations. But I think from an investor's perspective, there are different times where, sorry, let me step back. For entrepreneurs, there are different types of funding available, right? If you're raising pre-seed, maybe you don't have revenues yet. So there is no single answer to the question that you need to have revenues to raise money, because pre-seed investors most often invest in companies that don't have revenue. So you need to make sure that the people you approach to raise money from are the ones that fit your stage of maturity when you're raising that capital. And you need to make sure that what you're offering investors matches what they can. Hassan mentioned in that previous conversation how VC funds, and we have ourselves investors, and we need to return that money to our own investors. And the average promise of a VC fund is when an investor gives me money, I need to return 3 to 5 times their money. And to be able to achieve that on average, because you have some entrepreneurs that will fail, some companies that will fail rather, you need on average to shoot for a much higher objective. And so you need to make sure that you're showing that potential to your prospective investors.
So I don't go to VC if I'm not 10xing, as you were told. What about when do I go to the angel? When do I go to a bank? When do I go to, when do I go to friends or family, like my uncle, and charge him with black tax?
So usually what we call the 3 Fs, friends, family, and fools, are not, the most ROI-driven investors. So I don't think that most of them will think in terms of multiples. Then you start talking with business angel, which is just the next level of capital available. Then these people usually are looking to make a return on their money. But they are able to take higher risk usually, and that comes to them a higher reward. And then you start to have pre-seed fund and then seed fund, Series A fund. And as you progress down the line, the milestones that these investors will expect are bigger. But overall, the multiple that institutional investors would expect, whether at pre-seed or at Series A or B level, is going to be the same, between 3 and 5x.
Okay. So I raised money. It's coming in. It's probably the most money I've ever raised. And I don't know how to manage my cash flow. Give me strategies to make sure that I survive.
So the way I usually recommend entrepreneurs for managing your cash is around being very mindful of the fact that the relationship you're building with your capital provider is a long-term relationship. So with that being said, is that they are trusting you with their funding, with their resources, so that you can put it to good use and solve the problem that you've identified. So it's a long-term relationship. Does it exclude that at some point you could actually end up losing it all? You could. And this happens a lot of times, and it's actually expected in most instances. But the key thing is that though, that doesn't exclude the need for integrity. It doesn't exclude the need for you being a very, very good custodian of the funds that you've been given to, kind of like put them to good use and make sure that do I understand why I need the cash for, right? Am I making wise investments? Am I, kind of like being very strategic on how managing the risk profile that I have within my company? And these are more or less, generally speaking, competence-based, I would say, cash flow management stuff. But the key thing is that as a young entrepreneur at some point, you might not have the understanding of what these things were. But I think if you approach it from, okay, so I'm going to be in the market for capital probably for a very, very long time in my life. At any point, you could need a loan, you could need someone to come in as an equity provider, you could need someone to come in as a different other junction within your business. You approach it from this is a long-term relationship kind of like move. Then you will think long-term, okay, so do I think I have something to use this money for? And obviously, if it's it's investing in your growth, it's supporting you in your working capital, being very understanding of kind of like what the needs of your business are. Then beyond that, I think one of the key things that we usually look for is that, because at the end of the day, even if I provide any capital to you, I only have a minority stake in your company, so I don't dictate the day-to-day functions of it. So I trust you to do the best you can in the interest of your business to drive your returns, and hopefully some of that is going to end up in my pocket as well.
But I work hard, and I want to enjoy my money.
Yeah.
And sometimes you're told you need to spend money to make money. I need to increase my salary. I need a bigger car so that I can attract more investors. What's the balance? Because we work so hard as entrepreneurs, and then when you buy a car, it's only mismanaging funds. Is there no balance?
Well, so I think it's, I don't feel like there is a one size fits all for how you manage that, really, if I'm being honest with you. And if you want to buy a car, like if you can